Hey y'all, I'm Mary.
And I'm Carla.
And we're the Smiley Twins. And today we're doing part 2 of what we did last week with the financial kind of conversation. Also, I don't have childcare for my 4-year-old this week.
Yes, so on this episode of Not Just Lip Service, part 2, we're going to talk, you're part of this, young man. How much money do you have if you have one of those little parasites in your lap? Just kidding. None. That's correct. And it's an important aspect of this second part. We're going to go a little bit deeper into some of the financial things with owning your own business, particularly an LLC. We're not talking about S-corps or really, partnership, sure, that's fine, but more just a straight up LLC. On that note, I did want to make one comment about LLCs I thought about last time. This is random before we get started.
Well, I wanted you to recap more. Okay, but...
Yeah, but I want to say this before I get it off my mind. Nurses think PLLCs are necessary. A lot of us think that. PLLC stands for Professional Limited Liability Company.
A lot of people think it's partnership.
Yes, and it is not. It does not stand for partnership. That is what I would say 9 out of 10 nurses who think that, they think that because they are professional, which we are not the professional that PLLC was really intended for. It is more along the lines of a doctor going into business with a doctor, by example. Or a doctor cannot go into business at a PLLC with a lawyer, by example. The professions have to match. So there's some different rules. We're not talking about that. And so if you're a nurse or even a nurse practitioner or even a physician or anybody, and you are listening to this and you're thinking about opening your own LLC, like just an LLC is fine.
Honey, you can't sit with me if you're going to do that.
There's sole proprietorship, and that's just you opening it just all by yourself. There's a member managed LLC, and that's you and someone else is opening it together, and you have different members in the LLC. There's different ways to do it. But for the most part, when we're talking about this, we're just talking about LLCs that are owned by you. And on that note, I know I'm going to recap. I get real passionate about this. If you're married, you don't people get all twisted about having them and their husband own the LLC together. That is not necessary. It makes things a little bit more difficult because you then do have to have an operating agreement between you and your husband, which can be a good thing. Don't get me wrong. If you're over here thinking, well, I don't really like my husband, or there's something going on personally there, that is for sure a consideration. But you can just as easily will that business to your husband. You can have a document. It's very simple, drawn up, saying that he or she gets it, whatever the case is. But it does complicate things when you go to do business down the road as you grow. So if you're a nurse, you're doing your own Botox business or whatever, again, it's not bad to have him or her on there. It's more just, it does make things complicated when you need to have both people sign something. You need to have XYZ. It's annoying, quite frankly. Operating agreements are required, and anybody who's member managed and you try to do anything, they will say, well, where's your operating agreement? And people are like, what operating agreement? You got to have one. Versus a sole proprietorship, it's just you, and you don't have to have those things. You just need your articles of organization and your SS4, which is the letter from the IRS that has your EIN, which is your tax ID number. So it keeps things pretty simple. Doesn't mean you can't run it together.
Okay, if I've opened an LLC and I don't know where, when that S4, how do I go about finding my EIN?
It's a great idea. So a great question.
It's a little off topic, but
well, it is very important because you've got to have both of those for everything financial we're talking about. So as soon as you open your LLC, you almost immediately get your articles of organization. Those tell you next to nothing, except they are from the Secretary of State, whatever state you're in, and you do have to have those to open a bank account, do all kinds of things. You just store those. It's like storing your Social Security card.
Scan them into a file.
Well, they come electronically. They come electronically, so it's not difficult. You can get copies of those for free. We've talked about this before. You will immediately get it mail that says for $112, we can send you copies of your articles of organization. Don't ever fall into any of those scams when you open your business. You don't need any of that.
You don't need the labor law to pay for labor law stuff. You don't do. You need that stuff, but do not pay. All those.
Basically, don't pay for anything.
Before you do any of that, make sure you don't need to. Which is
because remember, LLCs, businesses opening in the states are very positive for the state. It's economic growth. They get taxes. They're very happy. So they're happy to help you with some of those things. So then right after the articles of organization, honestly, in the same email, a lot of times it will tell you you've got to apply for your EIN. That's your employer identification number, also known as your tax ID. When you do not own an LLC, your tax ID is just your social. That's what you fill in on your personal income taxes, your Social Security. That is your tax ID. But when you have a business, your federal tax ID is your EIN. That EIN number, you have to go apply, and it literally, once you file, it tells you, click here, to go get your EIN, takes next to no time to do, and then your EIN is typically produced very quickly. The official letter that comes by email and in the mail on, it's called your SS4. That is another really important document. A lot of times they will just ask you for your EIN, but there are plenty of people like banks and all kinds of things that want that actual SS4. Again, you can get another copy of it, but golly, just store that sucker in a folder in your email and you'll have it for your business forever. So that's how you get that LLC started.
Right, that's how you get it started. How do I find it if I can't find my EIN?
If you can't find your EIN, you can just go literally Google EIN IRS lookup.
Okay.
And you can go find it that way.
Okay, so last week we talked about
the just basics of I was frustrated looking at different P&Ls for some of our newer businesses and finding that they were making comments about losing money or they weren't making any money, but hundreds of dollars were being spent on things like gas and lunch and just things like that. And how the difference between talking to somebody who's managing your money, like an accountant or a controller, versus a tax accountant who's trying to help you at the end of the year avoid paying as many taxes as possible.
Yeah.
Both are incredibly valuable, but they're two very different things.
Yeah.
And the tax accountant, which is what a lot of people have, they don't have a regular accountant because most people don't have an accountant managing their personal finances. They only have the person doing their taxes. And what they are telling them is that, oh my gosh, absolutely, expense that against your business, expense that against your business. That's all great, but you got to have the money. You don't have any money. You don't have any net profit to expense against. So they're just misleading you or you're not understanding why and when you would expense things against your business.
Right.
So you do that when you have a net profit at the end of the year, net profit being all the expenses are paid and I've still made $5,000. You're going to pay an LLC is a pass-through entity, so it's going to pass through to your personal taxes. So if you're a nurse making $50,000 a year, you now overall have made $55,000 a year. You paid no taxes on that $5,000 to the government because it's an LLC and you're not paying any taxes up front. And so you will owe your federal income rate plus the 15.3% self-employment tax. We talked about that last time.
So expenses, it's like, well, how do I know how much I'm going to be? Maybe it's January, I started my LLC, and then, get to the end of the year, and I do have a net profit, and I expense off nothing because you told me not to expense anything off.
Yes, great question. So what I told you to actually do was to have a separate tab on that Excel sheet you're keeping up with, and to put those expenses over there, and to have those.
QuickBooks Online is a great resource for $21 a month.
Yes.
It's very user-friendly.
Yes, and you can decide. The problem with QuickBooks Online, I will say, is it does get a little bit gray when you start taking expenses on and off. So if you decide to go that route, when you use, your business credit card, if you can't at the end of the year decide, well, you could put a personal investment in and up that, but it's more like if you're not that's a little more advanced to me. Using a QuickBooks.
I think there's a setting where you can.
There might be. Well,
you can simplify
so the point is you're setting the expenses aside and you kind of look towards the end of the year and you say, oh, I was doing appointments. I had this much gas I spent, whatever the case is.
Would it not be, it's not a good idea. What about using your personal card for the expenses that you keep up with on your separate Excel sheet? And then later add on.
You can use your business card. So you don't even have to really separate them out. The point of the conversation last time was separating them out allowed you as the business owner to get a better vision of what you were actually making before you started paying yourself with lunches and other things. Those lunches and that gas are tax-free, so you're not really paying yourself, but you fed yourself. I mean, you would have had to find lunch some other kind of way. Yeah, so that's money you paid yourself. But it's you expense it so that it's tax-free and it's an expense against the business, and thereby bringing your net profit down. So the point of separating it out was more so that when you're looking at it as a business owner and you're looking at your growth, you can say, okay, outside of this $900 I spent on lunches and gas and stuff, which are expensible, and yes, your business should end up paying for, I would have broke even. Right. Like, wow, I actually did, but I was also able to, because a lot of what I saw is a full tank of gas. I know you didn't go to that appointment and back, and you were a full tank of gas. So you really got 3/4 of a tank of gas for your personal life. So that's a big benefit. So you can really see what your business was actually doing. All those expenses are great. I mean, even supplies, but where a lot of medical professionals get it backwards is they think they're going to start a business and then they're going to have to spend no more personal money. No, you might still have to, you want to keep track of it, but you might still have to put in buy a big bulk of supplies and it's $400 and your nursing job pays for that. It's a
And
business.
what's that called when you put your personal money into it? Like
There's a capital infusion. You're infusing a personal...
Capital is synonymous with basically money.
Yes, you're putting cash into the business from your personal account.
I don't want capital. It's like, just call it cash.
Yeah, well, yeah. So you're putting money into your business. And so what we were going to kind of get into on this one was a little bit deeper, was the whole how capital infusions give you a basis in your business.
Is your green light on?
Yes, I made sure of that. Thank you. And okay, so let's take, somebody said this is a very good example of this. We were very fortunate and did not have to put in a lot of money.
Put in some money.
Well, no, we did, because we both took our training classes. We bought our initial supplies. We bought our initial bottles of Botox. I mean, we put in personal money before the business started paying itself. We did not take, and then remember, we didn't pay ourselves. So like, you're kind of putting in personal.
Well, we got a credit card right away.
Yeah.
And we actually bought that stuff on the credit card.
Well,
we could.
Yes.
There was the way that card worked, there was a small limit that screwed.
And why was there a small limit? There was a small limit because our LLC was fresh and there was no real credit history to it. And so the credit card it recognizes it's a new business, is okay with it, but they're not going to just give you 50 grand and be like, yeah, sure, go ahead. Y'all go after it. Because if your LLC bankrupts and you did nothing,
So it was small, and then we bought, we did it, and I don't say this arrogantly, we did it nearly perfect.
Move your hair.
Why? It's not going to mess, the marks aren't that sensitive.
Oh.
Yeah, we did nearly perfect. We bought what we could on the credit card, and if there was a tab out, sure, of course, we maybe used a little bit of money. We bought what we could, and then as soon as we made money off of what we bought, the Botox, we paid the credit card to then be able to buy more on, and that's how we put all of the money back into the business, every last penny of it. We didn't buy, we didn't expense off anything in the beginning.
No, we didn't. That was a little bit of an error on my end. At the end of the year, I think we gave ourselves. Well, at the end of that first year, I think we did like maybe $3,000 each. We probably spent maybe $5,000, and we could have had a little more, whatever. But yeah, I wasn't. Honestly, I'm doing what a lot of people are doing. I was working a very full-time, demanding job. Like keeping up with all that stuff was a little bit difficult, but we did keep up with our income because I was really knew that we were going to have to pay taxes on what we were going to make, and then we started getting. We had traction pretty early and started getting those clients. But the key to what we did is that we did not give ourselves any of that money. We put it all back into the business to buy our product until we had enough to buy 10 bottles of Botox at a time, and we still had money in the bank. Wonderful. Now we're going to start running ads, or maybe we can buy all our supplies on the business, or whatever the case was. It all went back into our business so that we never had to put personal money back into the business.
It kind of was an ideal situation. Like obviously there are people who want to start a business who need to literally feed their mouths.
Exactly.
Which is not, so then I know what Carla would want to say is like, oh, well then maybe you shouldn't have quite started that sooner. Maybe you should have kept
No,
a
it's a side hustle. It's a little bit different.
Well,
we're talking.
No, I know. I'm just saying, let's say, because I didn't go back to anesthesia right away, and I was able to just not be paid for a hot second, but not everybody is. So if you're able to buy something to supply your next, week or two. Sometimes it gets that tit for tat, and you do need to pay for your groceries. I'm just saying, not everybody is in our situation.
You can take money out of it. That's when you start getting, so if you're going to do that, that's where if you're smart.
It's more of like a need. If you absolutely need to.
Okay, so if you absolutely need to, then that's when you do start expensing things off your business that you can. Right?
Sure. I'm not suggesting.
So my point is like, so let's say you need $300 for your groceries. So you are working your business out of your house. Then maybe you rent one of your rooms for $300 a month to the business.
Yeah.
It's a direct wash. It's expense against the business, and you're saving $300, and you're paying yourself $300 out of your business for the rent of the room. So therefore, you can use that for groceries. So it's really getting smart in that type of stuff. Maybe you do start filling up your gas tank.
Do you need to make that an actual payment, though? Show.
You need to have, if you do something like that on the lease, you can have just a tiny little rental agreement.
What's an easier way? That's a little more. So that's a little more complicated.
An easier way is just taking money out, and then if you take money out, you've got to label it as called pay. You're paying yourself.
You're distributing. Most
likely.
An
owner's distribution. Yes.
Yeah, and then so you've paid yourself. That's how you pay yourself out of a business when you're just an LLC and you take money from it.
Correct.
Yeah.
But then that's going to be taxed.
I'm just saying that for a label.
Yeah.
labeling purposes.
Yes, of course, on owner's distribution, that's right.
Yeah.
And distributions are fully taxed completely, and so it's be somewhere around the 40% mark. So that's why using it as an expense and getting around it that way, in a very
Makes more
legal
sense.
way, you're not going to lose 40% of your money. You lose 0% if it can be expensed against the business in the appropriate way.
Yeah.
And so you just have to get a little creative with saying, okay, I need $300 for groceries, but I also drive 4 appointments this week. So I'm going to, instead of filling up my gas tank for $80, I am going to do that, but I'm going to expense it against the business, and that will help you down the road. And that's a way to take that money out of the business very legally and compliantly without and giving it back to yourself without getting taxed. So.
And there's other creative ways to do it besides that or whatever. But that's one of those things like send a message or write a comment or something if you wanted. Or those are things on Patreon we kind of dive into, or you could send a message and we could list out 5 ideas. Here's 5 ways to get $300 out of your business. That makes sense. Little squirrel. Are we eating lunch today? Like,
That's a total squirrel right now.
I'm just kind of hungry.
Okay.
Sometimes it happens, but it's just
We'll discuss it here in a minute. So that is.
Is that a yes, we are eating lunch?
That is.
That was going into. Sorry, the squirrel. It's fine. So that was recapping that. So in the expenses and kind of that what you can and cannot expense, and we did really go into why you shouldn't do that and when you should do it and all that stuff. So some of the other stuff that we hit on last week that you kind of would get want to trail
Well, we were
off.
talking about EBITDA, by example. We were getting a little deeper into like a P&L. And so we can talk a little bit about that. So let's say your business is a little bit more mature and you're making money and maybe someone approaches you because this is a very hot M&A market, mergers and acquisitions. There are platforms out there that are like Medspa partners, whatever. They will come and they're trying to essentially gobble up the onesie twosies all under their platform. And you can a lot of times keep your own name and all kinds of stuff, but they might provide X, Y, and Z, and then yada, yada, yada. And then you owe them a fee.
Or all of it. And then you just become an employee.
And you just basically become an employee or part of them. So what makes you valuable? I'm doing great. I'm clearing $10K a month in net profit. That's $120 a year. That's a fantastic number. And I pay myself. Holy schmoly. What will happen is you'll get valued, and they'll look at what you're doing. They look at things like what you're spending your money on. If you're breaking even, but you have meals and entertainment, at $2,000 a month because you're happy to go expense off a conference and buy your lunch every single day and go to meals with your husband and talk business, which are ways you can expense things off. But that's a huge part of what you're spending your money. It's like, people are going to hate that.
Yeah.
And they're called add backs. And that means that if they were to buy you, that would all be stopped because they'd have then a policy and they'd tell you, you can't do that. But it's an add back to your business. But it also doesn't look great if they want you to stay on as the owner operator or stay on as some equity partner or whatever, if that's how you're running the business. Yeah. That's some crap. So when it gets down to the very bottom, you have your earnings before interest, taxes, appreciation and depreciation, or whatever, or depreciation and appreciation. And that is that number that really is the driving factor behind a multiplier. So what is a multiplier?
Hold on. I'm stopping you here. Let me back up. Okay.
Sorry.
So before interest, so when you're talking about EBITDA, and what is interest in that context?
Okay, let's say you're paying interest. You have a $100,000 machine and you have an interest part of that.
Okay, so it's basically what it means. So there's your interest.
Or you own a property and you're paying interest.
Let's just use one example. Let's say we own a $100,000 machine.
Okay.
So the interest payments.
Interest.
Interest. This is before that.
Earnings before interest.
This one.
Taxes.
Yeah.
Because taxes. That's self-explanatory. Depreciation. So machines depreciate. Any valuable asset or property, building,
like a car when you drive it off the lot.
Yes. As soon as you drive that car off the lot, it is not worth the value that was on the sticker. That's depreciation. And that's just a natural thing that happens. And then on the flip side is appreciation. Some things get more valuable, like a piece of land is going to appreciate.
So how does a machine, how do you calculate depreciation?
That you're getting into what literally a tax accountant has to do. That's beyond my knowledge of the calculations for how you depreciate based on the tax laws.
So they have a law basically surrounding like medical machines,
Sure.
and then they have a law
Sure.
surrounding cars. And they
Sure.
have a law, okay.
Yeah.
So-
What rate it can depreciate.
And then they have probably the same laws on appreciation, which I would imagine like a piece of land or real estate.
Yeah, and you have
is also
appraisal.
geographical, blah, blah.
Yes.
And yeah.
Yes.
Okay.
Correct.
So
that's why all that's some of that is subjective. Some of that's all kinds of stuff. So it's just kind of down there. So what are you doing before all of those things? And you really can't interest yourself to death. No one's doing all that.
So how much money are you making before all of that?
Yeah, because no one's taxing them. That you can't help
that's
any of
your
that.
EBITDA.
Yes. So if, let's say it's $100,000 a year. Mm-hmm. Well, then you have what's called, when you're valuing a company, you have what's called a multiplier.
Right.
Some people have multipliers, literally a times X number of 1 or 2. Okay, if you clear
most at least are 2.
Yeah, if you clear $100,000 a year, because multipliers assume growth, and that's what a multiplier is for. It's saying, okay, you're doing this year. Not everybody, but a healthy business grows. So you're going to make more down the road. Mm-hmm. So, and then there's so many things that go into it. What space are you in? What market are you in? What amount of growth can you do? Like if I make these skulls right here, a simple product, there's only so much I can really. Now, can I do other SKUs? Is there an opportunity for that? Do I have a patent on said skull? Like there's a lot of factors that go into how you value a company. But if you are a Medspa, obviously, in anything in medicine, healthcare is super valuable because there's always something new coming out. Mm-hmm. There's always a new service. There's always.
So you said space, and when you said space, it's like industries.
Industries
have certain multipliers.
Yeah, so
ranges.
If you're a Medspa and you're making $100,000, you're clearing $100,000 a year in net profit, then you.
It's like
you can
it's a wide range. Usually it's 4
to 8 to 10 to 12. Yeah. It just depends on what a lot of people. It depends on what the company's looking for. Like what type of med spa are you? Obviously, do you have multiple locations, which shows proof of concept that your proof of concept is even more. Yeah. What traction do you have? What is your growth rate month over month? So month over month, you gain 10% more clients. Mm-hmm. Retention rate, you keep 90% of those. There is a lot of factors that go into that.
And they dive, talking about these people, they dive in to all of that and find out all of that and look at all of that. And so just if you have that initial conversation with someone, don't think that you can say, oh yeah, my retention is 95 and they're going to go find. They're going to go find it.
It will all be backed by data, and there are people that spend a lot of time making sure that information is accurate.
Is exactly accurate.
Yeah, so there is never a reason with an investor. I mean, your initial pitch and stuff like that can paint a pretty picture with what we expect to do, yada, yada, yada. You can do all that, but the bottom line is it's going to be based on history. It's going to be based on the last couple years and what you've done in the last even couple quarters, and it'll come out. Yeah. And then, guys, a lot of it is value is also based if the model, which for so many businesses that are getting acquired is that they want the people who are running a successful business to stay running the successful business, which means you keep your salary, you might get to keep a piece of equity, and you're going to continue on. But they're going to get 80% and they're going to give you $1 million. I mean, I'm making that up. How valuable you are as an owner has a lot, are you a good face for the business? Are you a good personality? Are you just somebody who's behind it and are replaceable? Anybody can come run a product company. We don't need you. We don't have to pay you $200,000 a year. I can pay Joey in our firm, $40,000 a year to do the same thing you are because you're just running a product. So the people, the owners, it is a valuable part of that. So that's why the pitches, your presentation, all of that is very important because that does add value.
So let me plug in there. That's not to say, because we've talked about this on this board, that's not to say to connect your face so closely to the business that it could never be separated. Because ain't nobody want to buy that either. So, but we do talk about a lot about that, about, if you name your business, Mary Smiley Ford,
aesthetics,
then it's going to be, that can be a little bit harder, except if you're a select few people to then take yourself away from, or open multiple locations or whatever, because I'm not the person there all the time.
Yeah, you're not Kendall Scott, so let's not be Kendall Scott.
Yeah, the Kendall Scotts of the world, we're able to do that. Those are, most likely that's not possible. So there's a balance between being this fabulous owner that can do what you do and be the only person that you do, or one of the only people that you do, or you do it so well that you're the person to do it, versus don't that's not an invitation to tie yourself.
Yeah, I mean, there are brands that are names, and there are brands that are,
Sure,
and that face carries on, but that person exits the business or whatever the case is. But yeah, that's
rare.
It's very rare, not typical. So starting out, it is important.
But yeah, that was just a little.
Yeah.
So
And you can start out that way if you want it, because we really got going in our communities with, we played off the twin thing, we played off Smiley as our maiden name, but obviously Smiley Aesthetics we realized it was broad enough to. People don't necessarily know that's our maiden name.
Yeah,
like
it
can apply. But we started out very much as us, and then now that brand has spread to be more than just us and is in multiple cities and states, and it doesn't necessarily have to be Mary or myself on any of the marketing. It's the brand, it's the S, it's all that. So
back to EBITDA and back to you're talking to that investor, and that's kind of the number that you're getting your multiplier from, which we kind of went through, and
that's where you can negotiate. Someone's like, "Well, I gave you a 3-time multiplier." I'm like, "Hold on a second, honey."
This industry standard is at least
it's
4 times.
Yeah, it's up to 4. It's up to 6.
And I want it to be a 4.6, whatever.
And I have this traction. I have this sustainability, and I can replicate this location. And there's sustainability, replication, traction. Those are all trigger words for valuing a company and how valuable your company is.
And I think a pitfall of entrepreneurs a lot of times in their companies is a lot of overvaluing way more than undervaluing.
100%.
But my Lord, people think the multipliers are impressive and the overvaluing is impressive. And a lot of times it's a lack of understanding of what EBITDA actually is and stuff. But it's, all that to say, it is what it is. You'll get told real quick what your actual valuation is, but it's just something to think about.
Yeah.
So what else with our P&L where we kind of going through and do we have left to talk about that we talked about last week? I
mean, P&Ls, profit and loss, they're very, so there's cash flow. I mean, you can talk about cash flow statement. So as you get a little bit more mature, there is, your P&L is kind of your overall, here's what I made gross profit, or gross income, gross revenue, gross income, really. It is all the stuff at the top, every penny that came into the business, no matter how it came in. Whether it came in and it went right back out, or it came in and you lose money on it below, whatever comes in is up top. And then you have your cost of goods sold and your other expenses or discounts. What are you complimenting off? If you're a med spa, it's notorious. Staff treatments, your own treatment. I mean, every time you put 64 units of Botox in your face, that is expensive. So keeping up with those things and recognizing that, if it's not on your P&L, those are things that are things that can hurt your value when people start really digging in and they notice, well, you bought 100 bottles of Botox, but there's only 80 bottles worth of revenue here. And it's very simple to really figure that out. Where did the other 20 bottles go? Well, people are injecting themselves left and right and not putting it on there, not charting. So that can really add up, especially in a healthy med spa, the treatments and stuff that are happening. And so you have all of that down below in terms of cost of goods sold. And then you start doing your expenses, which is, your marketing, your ads, your rent, all that type of stuff. What is coming out? And then at the very bottom bolded, very, very bottom is the net profit. And so EBITDA is not equal to net profit.
Right.
It's a few line items above, but they're both healthy numbers to look at in understanding what your business is all about. Because most people, when they start, aren't overly leveraged with EBITDA issues. Like you don't buy a building.
Hopefully not.
Well, unless
you're buying 3 machines when you're starting out.
Yeah, and your interest payments are, the interest part of the payment is, $3,000 a month. Well, you're starting to really get impactful there. So then you have that net profit number. So then cash flow. So once you get established, the biggest thing that I think most injectors starting out need to have is to understand their hard costs. Lunch, gas, those are not hard costs that you should be adding in starting out. If you start out with a bang, you want to, go ahead, but I just wouldn't suggest that. Your hard cost is your rent. It's your, on average, I'm going to try to keep my par of Botox at 5 bottles on hand and a couple boxes of filler, whatever. Inventory is not a hard cost, but you can absolutely allocate X number of dollars to that each month or whatever. And it'll take time as you get going, but Botox is expensive. So let's say $3,000 a month is my inventory. And then you have other hard costs might be your malpractice insurance. If you're paying that monthly, it might be.
It's like the cost you need. What's a way to say it in layman terms? It's a cost. That's the cost of operating.
Like operating costs.
The
Yeah,
cost
they're
you
just
have-
fixed. They're fixed is what it's called. Fixed costs every month. Inventory is not really a fixed cost, but you can allocate.
These costs are only fixed.
Yeah, so knowing your fixed cost, your rent is fixed. Now,
like the supplies I need to inject Botox are not a hard cost.
they're not a fixed cost. They're
So fixed and hard are not synonymous.
Yes, they're synonymous. A hard cost and fixed cost are synonymous.
So
supplies is a varying expense.
Yeah, I know. So but it's like
But you
totally necessary in order to.
Well, but you can
operate.
allocate. So what you do is you say you've been in business for 2 months and you're growing. It's hard. You can say, and I'd overdo it. You spent $300 last month on needles. That's way too much. Let's just imagine you did that. Well, then this month I'm moving forward on this is all just for cash flow. Remember, this is all a projection. We're doing our best guess to see how much cash we're going to need moving forward.
Right.
In a new business, hopefully you're just looking at a month because you're hoping month to month you don't have to put any personal money into the business.
Right.
But as you get to like our stage, we're looking out a quarter or 6 months even to look at where our cash might be.
Yeah.
Or even farther. I mean, a year, 2 years, you're looking out a long ways. And so you take your varying costs, like your supplies, and then you'd average out. The last 2 months I spent $312 each month. Okay, cool. Then let's just go $312.
Right.
And let's put a little bit of a bump in it. Let's put a $5 bump a month. Again, kind of making all this up. But because if you're going to grow, you're going to spend a little bit more. But cash flows are intended to be looked at pretty regularly. So as you grow, you can adjust those numbers. You don't have to, project out crazy growth. You can adjust those numbers,
Right.
but just know that those expenses are going to go up. But
We look at ours every week.
I look at ours a lot. But as our expense go up, what else goes up? Your revenue.
Hopefully.
So it should be pretty parallel,
Hopefully.
which is why if you make sure you don't have your revenue growing, but you have your expenses staying flat. That ain't ever gonna work. Now you can have your revenue grow, your expenses going up a little bit, and have your revenue stay flat.
Yeah, we're kind of in this cash flow thing, which is actually that's where we have a bookkeeper, we have a controller or whatever who does this for us. Like it can't
There's
be
a big difference between those two. So.
Okay, we have a bookkeeper who's
a controller.
Okay, holy crap. We have a controller who's doing this for us. And, it's not that easy to, you have to know what you're doing with Excel and or with the QuickBooks or whatever. But, you have to kind of, you're kind of talking about this, just got to plug this stuff in.
No, I'm not. Hang on, let me finish. If you can, because if you're a new, you can literally just do a month versus cash flow. It's fine. You don't have to do projections out. You can say, I know that
Yeah, you're saying a P&L.
Well, kind of. Not really.
You can do a P&L, but to
Sure.
actually kind of cash flow it out, even 3 days requires you to know a formula in Excel to drag it out 3 days.
Well, you
So
don't
I'm
have to
just
really
saying-
drag it out.
I think you're over.
Okay.
You're maybe one level above a lot of people. But anyways, all that being said, a cash flow thing,
QuickBooks can produce a cash flow, if I'm not mistaken, based on what you put in it over time.
over time, right? But someone's not maybe looking at a cash flow right away.
No, I know, but it's just nice to know that, right away, obviously, you can put those fixed costs and say, I need $2,150.
But isn't that a P&L?
No, it's not, because your P&L is not like we have. By example, Allergan gives net 90-day terms. So they say they will let you buy something, and then you have up to 90 days to pay it. No interest. It's wonderful. Allergan's lovely. So you may buy $10,000 worth of products today, but it's not due until for 3 months. So you may not pay that on your P&L today, but it's out there. You got to know that 3 months from now, I got to pay it.
Yeah.
So understanding that moving forward, not everything is paid. A P&L is, this is what came in, this is what I paid, this is what I'm left with. Well, you're not always paying everything, or you have revenue in a lot of businesses. Someone's paying you, I don't know, maybe they're in memberships, and they may or may not use something this month. There may not be a cost of goods sold this month because they didn't come and buy anything. So I didn't have any Botox for that particular membership.
So then what is the best tool for this?
I mean, as you grow and you get more mature, starting out with QuickBooks is what I always recommend at its very base. And then you can do what you can do. If this all is so foreign and you're like, I don't know what in the world you're talking about, that's where we've recommended bookstime.com. We have no affiliation with them, but I did personally use them. They were very affordable, transaction-based bookkeepers. And what that means is their expenses went up as your transactions went up.
Yeah.
Well, as your transactions go up, you're obviously selling more. So by selling more, you should be able to afford more. So that's kind of the point. And I thought they were very reasonable, and they did a very good job, and they used QuickBooks Online.
So here's a specific question. So if I'm doing memberships, how do I plan for memberships? Like someone could drop off at any time. I could add 3 one week and none the next. Like how do I plan for memberships?
The only thing this is where new businesses struggle. The only planning that is really, that's why 2 years is such a attractive term in accounting and in business, because you can't do a lot of planning without knowing what happened in the past.
Yeah.
So, and you never lean on anything that could fall away without knowing the history. So never lean on anything that could disappear unless you have the traction to prove that it's not going to disappear.
Yeah.
Memberships is a perfect example.
And
I felt that way
even
about semaglutide a year ago. I was
a tiny plan for just in case it still disappears.
Well, a new treatment like semaglutide was a great example of very rarely do you have a treatment example in medicine because most things don't come on and disappear. Mm-hmm. But if I was very adamant a year and a half ago that we do not lean financially on the success of semaglutide until we knew that it wasn't going to just disappear. Because if I started leaning into that, we're making this much a month on semaglutide, and something happened and it went away, well, bam, that can literally sink a business if you lean into something like memberships, and then you have an economic downturn and 50% of your memberships fall off, and that was $5,000 a month for you. That could be, you could look now you're back at a point where I got to put $5,000 in of my own money to meet my needs.
Yeah.
And I got to figure out how to get this turned around.
Yeah.
Yeah.
Okay, well, we could talk on and on and on as
she's bored.
Amazing as this conversation is, and how
it's
absolutely thrilling I am to be having it.
Next time we have a clinical conversation about jaw structure, I'm going to act like I'm just...
That's slightly more
bored.
Whatever. You know who we could have on is maybe like Indy, and you guys could just go to town talking about financial stuff.
Do you want to talk about the Constitution?
Yeah, I love the Constitution.
We
should talk about that.
Well, guess what? We can get Gordon up here, and you two can do a podcast on the Constitution and how it relates to medical aesthetic. We can do that right now.
The point of this, I think the point of this was that my big thing that the takeaway is for our new injectors and new Medspas coming on is that there is a whole side of business. It is not just, I can do this. There's so much more to it.
Gosh, we did kind of start talking about that, which it is doable. It's very doable, but I think we've been in this thing about kind of showing the worth, and we don't talk about Smiley specifically a lot on the podcast, but the worth or the value of what kind of Smiley itself is doing. And when when you're starting a new business, there's a lot of things like Smiley that can help you get the business started on the front end, and the value of what is given is so heavily front loaded. It's given to get you going, and then it's like, well, I don't need that anymore. Well, dropping that once the value has been given, a lot of times is not an option, or you have to pay something to be able to do that.
Yeah,
to take
a lot of people to do what's being done for
which
you.
is why the way that Smiley does it is a little risky insofar as we don't take any upfront fees or anything, which we're very proud of. But for that reason, we have stuff in place to protect us as a company that someone just come take everything and then just, okay, see you, bye.
Our whole structure and model of our company is literally, truly living in the mission that we aren't going to make anything until that person succeeds. And our mission is to help nurses and other medical professionals start, own, and operate businesses that make it.
So if you have paying all these upfront fees and upfront things,
that's just not helping you make it.
Yeah.
So we need you to make it. Otherwise, we failed too, and we didn't get anything from it. And then, and then once you make it, well, that's my most proud thing about us is that it truly is our mission. Our model lives out the mission, and. So it's maybe we haven't done the best job sometimes of helping people understand that. But there is a lot.
And we provide a lot of value for always. I think it's not like it's all given in the front and then none's, the point is compliant, especially in an industry that's ever changing and dynamic and stuff is.
There's a lot that goes into business. It's not just, I have a charting system. And nurses, and it's because medical professionals are going to a hospital. And I'm looking at Shelley, our new director of quality and compliance, was the vice president of quality in a hospital. We work together, and nurses are just handed, and medical professionals, everything that they could need. They never have to think twice about any of the business side of things. Mm-hmm. Very rarely do they hear anything about that, other than you can't do overtime this week. I mean, they're not understanding the in-depth that goes behind it. as soon as you start your own business, you're responsible for all of those things. So it's a
I don't
lack
know,
of knowledge.
as we always say, is not an acceptable answer.
I don't know.
I just didn't know.
The IRS is not a fan.
I just
don't
didn't know. The
Neither
law
is
is
the
not.
Constitution.
Yeah, I just didn't know.
The law does not like.
It will take your license just as fast. And I think in the medical aesthetic specifically, and we're getting off on a tangent, and then we'll be done, but it's like, oh, it's the wild, wild west. No, it's really not. It's not. Like, there are laws there, and yes, there is some grayness or some interpretation to be had by legal professionals, not by yourself, please. But for the most part, like, it is actually, the structure and stuff is there. It follows very closely to, like, hospitals and stuff. So, and with some variations, of course. But, you know, this whole thing of like, well, I'm just going to open a Medspa and not worry about the legal stuff because it's, you know, because it's not really there or because it's not been defined that well or whatever. That's not going to protect you when something goes wrong and somebody, like, they're going to use the law that is there, the case law that is there, which it's there. It's already there. So,
and to wrap this particular broadcast up, the other side.
Go ahead.
Is it muted? The other side of that, so for nurses and medical professionals, we often think about our medical licenses and how that's what can be taken, and that's what the law will take. But from a business perspective, you also have business licenses and business rules and county taxes and all kinds of things, and for the state and the local government and cities and counties and federal. And the penalty for that is that there's no license for them to take, like your medical license. No, they'll just cost you a lot of it. They'll take your money. That's how they get that from you. They'll take your business license and they'll take your money. So there are a lot of people operating, and the business license threshold for when the Secretary of State wants to know what you're doing and each county wants to know, like in our county, in Davidson County, it was $1,500, I think. If you made more than $1,500 in your business, you had to get a business license, you had to register, you had to do all these things. They're keeping track. So the penalty for that is money, quite frankly. Whereas criminal, to level of criminal activity, if I'm not mistaken. If you don't do X, Y, and Z, I mean, everyone hears these nightmares about tax evasion and all other things, and yeah, those are actual laws that can be broken, and that you can actually go to jail.
Yeah, just because you didn't, like, well, I didn't know, or you're not actually trying to evade taxes, you still are actually, they still consider you evading them.
There's still rules.
So that's still tax evasion.
There's business licenses and there's medical licenses. There's all kinds of things. And so there's a right way to do things, and it's the only way to do it. So we're just real big on that, obviously.
Yeah.
Okay.
That was a little tangent that didn't, but anyway, if you have any accounting and stuff questions, we're not giving any financial advice. We're just trying to help guide and the way that, and teach the way that we were taught, which is, well, hopefully a little better than the way we were taught, which we were self-taught and learn and, you know, trial by error, and we learned stuff as we went, and we're trying to give some of that stuff on the front end to avoid mistakes or avoid fees or whatever.
And I will give an educational plug. The most valuable thing I've done in my career is getting an MBA. It was so valuable for me. And I do think that it is very reasonable, and then you can find very affordable ones. I did use WGU. It was an online competency-based, no affiliation with them, program. And there's a difference between competency-based and kind of traditional learning, and it was a very big win for me. But that's where I got a lot of real knowledge. Some people say an MBA is worthless. People in business sometimes say that. But for medical providers, when you're actively in a business and you're in it, you do learn a lot of that stuff. That is a lot of practical learning. But for me, I mean, I had none of that. So for all the new med spa owners, nurse practitioners, physicians, y'all, and we do not just make business owners.
But here's an idea: is if you're like, well, I can't afford to do an MBA or half the time, go look at a curriculum that you can find very easily online of an MBA and start finding resources for the topics that are on the. Do something to start. Yeah. Your financial or your business knowledge journey, and hit the, how curriculums are, hit the major ones or whatever, and start there. And then when you have the time, dive in. But do something to teach yourself if an MBA is not in the cards for you at the moment or for whatever reason. But
there are grants out there. There are grants out there for business owners who actually have LLCs to help them go get things like an MBA and to pay for classes. There's
do that.
All kinds of stuff out there.
I did the curriculum trick and nowhere near like finished or in any way equating to an actual MBA, but it did help if that makes sense what I'm saying, the major topics and then the subheadings and the little ones, but starting with those major ones, you really can find like a book on the major topic for that semester, whatever the class was for that semester, and that it has been kind of helpful for me in my little spare time. Okay, well, let's wrap this up. As always, Patreon, we always put a plug in for that because the questions and stuff just flow freely. There's a chat there now, which is excellent, which nobody's using that much because it is brand new, but it's a great place to pop in a question that we see right away. Okay. And that's patreon.com/SmileyAesthetics. If you're watching us on video, then it's on YouTube, yes. But we're also on Apple, Spotify, and Amazon. And if you've liked this at all or learned even a tidbit, then please share it or like it.
I didn't want to live.
Okay. Shout out to all the moms out there doing the best they can. And
You made 100.
yeah. And yeah, we'll see you next week with another one.
Yeah. What we got coming up next?
I'm not sure, but yeah, we've recorded a few episodes. We've got some compliance and legal stuff coming up, and
Yeah.
So yeah, we've got some good episodes coming up.
Constitution?
We're not talking about the Constitution.
We're not
okay.
going to talk about the Constitution.
Bye.
Bye.